Good morning. Got a little late start today. Morning, Simon. Morning, Joseph. Morning, Bob. How we all doing? I got in on this one earlier, and at 1R, I took it off. And then now, I'm sorry, where am I at? Okay, I'm long one Russell from here. Didn't hit profit target, so I have one, and I'm looking to add right here on this more complex bottom, and then we'll be hitting it. Hopefully, mean reversion trade and get in and out, make that 1R on the day, and I'm bidding buy stop 1499.4. So the high 1499.3 was the high. So .4, we got a high at .3 on this one. So we're looking for .4 to get up there and fill. Fairly decent bottom looking setup here, though. Yesterday's ugly reversal candle has not put in a sell yet. We definitely have big potential to sell off from there. Whether we start dumping right now or we get a bit of a pull back and kind of move around. So what we want to pay attention to is we've got that, straight move down. We double bottomed, we rallied, we got about a 50% move up, which is usually right about where things get testy. And now we have about a 50% move down, which is where things get testy, and we start kind of banging around. So with 1505 target, maybe. Yeah, 1503 area. So a move from the high here, 1515 down to 1491. There's a 25-point move, so 12 and a half off the 14. So right in this general area here would be a nice target for us to get in and out of. And that's what I'm looking to do today. We'll see if we get that. I've got one contract in here. Second contract would be looking to add here, and no fill on the second contract. I'm not married to this position, nor should any trader be. A little late start today on the trading, but that's okay. I wanted to get a workout in and have a really nice slow morning. How's everybody doing today? Good to hear, Bob. All right. Yeah, we got a little price action in the things. Seems like things are kind of coming back into what's tradable. It's been a goofy little week for price action trading. There's just a lot of repricing of risk on the bigger accounts, and they're the ones that cause the most chaos. Or it was all Robinhood. Who knows? Yeah, yeah, I heard. Being in the software development, being in technology space myself, uh, I have a lot of sympathy. Um, yeah, I mean, it is one of those things. So the rumor is that the Robinhood developers um, didn't code in the 29th of February. They forgot to account for a leap year, which uh, yeah, exactly. Being in technology myself as well, Bob, uh, it it's not abnormal. It's not an unheard of thing to happen, right? Like that is a I can see that happening. Absolutely, that's one of those mistakes where you're just like, oh, okay. And I've been on the dev side of trading software too. So like in the early 2000s, I was heavily involved in day trading software, so kind of akin to Robinhood. um, and yeah, just the stress and the chaos that comes of that when traders are losing money, or when the software goes down during trading hours. That was more of our issue back then, just stability of the network and bugs. But you'd think that there would have been a library that would have had that they would have imported, or they would have written to, that would have already had that solved, instead of like writing their own. But yeah, it's one of those things you just don't know until you're there, right? You just don't expect it to be like there's I always say there's 10,000 asses to kick and only so many feet, right? Um, and that pretty much is what happened there for them, I think. So in the 5 minute, we nice trade. 10 minute, no fill there. So in the high 1499.3. So I have a buy stop still in at 1499.4. Let's take a look at the 10, see it. Okay. Um, that's a nice bottom looking type pattern. I like. Yeah. I feel bad, man. That's tough for them. Tough for those developers. Just going through that. All right, got my buy stop in. This morning has pretty much been a story of everybody talking about how much money Bloomberg spent on his campaign. Before stepping out. Mini Mike, I guess, is the the president's term for him. Sasha, good morning. Good to see everybody in here. I am going to make myself another espresso. I am feeling groggy. I got 9.5 hours sleep last night, 3 of which were deep sleep. So I'm feeling pretty good. Yeah, 500 million to help the establishment. It's pretty crazy how much money was spent on that. That's just unbelievable, right? There's a lot of money. There's just like all sorts of speculation of like, what could have been, that money could have been spent for, all sorts of things. AT, what's up? Um, yeah, everybody's just kind of like trolling him right now. It is pretty crazy. Simon says with 325,000 users worldwide. That's incredible to think that they've got 325,000 terminals out there. He spent less than 1 month's revenue. It's so like all this stuff, like everybody's going in and doing this analysis on what could have been done, what was spent, all these things. It's crazy. Morning, VB. So 5 minute is playing out pretty well so far. The lower risk trade would have been on the 5 minute, getting in here with this position. You would have had double my position size that I'll be taking on the 10 minute. So that's an interesting little nuance if you're kind of learning this whole position sizing and how placing stops and tighter entry is going to get you a bigger position size. Let's say I'll have two contracts when I'm filled here. You would have four contracts trading on the 5 minute, and you would already be you would have already had your second fill at break even. Whereas I haven't even got my second fill yet, and I'm below break even on my 10-minute trade. So it's kind of an interesting thing. The other thing about going lower time frames, your profit targets are smaller too. Whereas on a longer time frame, my profit target is a lot further away. So anyway, I'm gonna go make myself a little coffee real quick. I'll be right back. It's also not a failed vol breakout, VB. This is a price action trade. I don't need to have this on the screen. It's probably confusing you. Double bottom pattern is what I'm trading. Failed breakout to the downside. You know, it's so cool. So my wife's in the other room. She's 31 weeks pregnant. Big. My son's in there just growing every day. She's in there getting after it. Workout. She's on like week 31 right now, and she is working out every single day with all that extra weight and everything and doing it. All right, I'm changing high. Stupid. 1497.4, dropping down. 1497.4 will be my buy stop. 1497.4. Lowering it down a little bit. Well, so bottom, up, second bottom. This is a double bottom, and now we haven't put in that. So you could look at this as a micro double bottom. You could look at this as a bottom, swing up, another bottom that failed. These are all double bottoms. And then we could, if we put in a new low here, that's probably, so let's get the new low. It'll run it, and that should reverse it. Low 1491.7. We got it 1491.5. So it put in a new low here, and now it's going to get aggressive on it, right? And then, so that's going to, all your longs would have had their stops here, here, and here. And so what happens is they get taken out here, they get taken out all this way, and you start. So the general theory is that markets crave volume. Okay. And where's volume? There's orders just sitting here, just waiting to be ran. So they're going to stop it out. And then, you know, you don't get a market bottom by even a short-term market bottom by everybody being in the same trade and everybody being long. You get it when the bears get, you know, aggressive, and then bulls keep getting stopped out. And then all of a sudden, bulls get stopped out, bears get aggressive, bears get stopped out, and then bulls who got stopped out are sitting here just kind of like, what is happening? What am I doing? And then it takes off. When it takes off and leaves, that's when the bulls are suddenly looking at it like, I missed it, and they start to have to chase it at the same time that bears are having to cover their shorts. So it's all price action. It's all playing the players here. So I have, obviously, because of the size of these candles and these move, my position sizing has shrunk dramatically, not just because we're in such a volatile area, but because of the size of the signal candles is forcing me to trade smaller positions. That's what we're getting right here. So you definitely, as a trader, would not be looking to trade larger positions. You're at this point in time, if you don't understand position sizing based on your risk levels, just trust me right now, your position size should be very small. So this is an even more exciting version of a double bottom. I really like to see lows get taken out and stops get ran before we start heading off to the upside. So understand this is trying to be precise in price action is going to get you run over. So one thing you can do, which is really nice in price action, is take your position size much smaller. That allows you to have that ability to see things and know what's going to happen because you have smaller position size. You don't need to freak out if you're oversized trying to play this bottom, and everybody thinks we're at a bottom right now. If you're oversized trying to play that, you just got your stop ran because you got scared and you can't handle it, and you're going to puke that volt or that pain. Right. Boiler says ATR for the last week has spiked to more than 2 times the previous ATR in recent years. Yep. And you can use ATR to help give you an idea of position sizing. Or you could, you could use the candle, which is what I use, the signal candle. This candle range, God, I really dislike. Where is this? Let's just drag this. How do I move that? No. Anyway, the high 1509 to 1497. That's a 10-point move on a single 10-minute candle. That is pretty large position risk. So if you're trading $100,000 account, that is, I believe, 10. Is that 2 contracts? Is what you would be trading off that one? 2 full Russell contracts. Look crazy about it. So it's really small volume. Or I'm sorry, really small position size because your risk range is so much larger. Larger and in charger. All right, I'm full long Russell. Got my full position, just got filled here. And so we'll be looking for some strength to get up there. And let's see, average price is in at 1500.45. So still a little shy. Um, 1500.45. Okay, Joseph. Any reason why you like to trade the mini Russell versus the micros? I trade them both. So it's position sizing. So where you could trade, it's based on your account size, first of all. But for example, if my position sizing would say 14 micros or one or two minis, 14 micros is preferable because you either have to do two minis to average out or one mini and you're going to be e-mini, you're going to have a smaller position than you should. So you could have 14 micros and be far more precisely position sized. So the M2K would be a better contract to trade if in that sense. So yeah, for sure. It's just the Russell bigger contract is what's used by the bigger accounts, and so that's going to give you some better position sizing. There's going to be a lot more volume on the bigger account than the micro. At least you're going to have so I could pull up the, it's the same trade. So it's the same trade. It's just two different contracts. BB asks, can we please look at the broader context, like what has made us actively look for a long on Russell today over, let's say, any other pair, long or short? I like to trade the Russell. This is day trading. Um, trying to get a feel for how we narrow down and focus or buy or sell on buy or sell something, on the day and what. Yeah, as far as day trading goes, Russell is my preferred product to day trade. Sometimes NASDAQ is fun. Uh, especially on a day where I mean, look, that's gonna suck. This is gonna suck the oxygen out of the room, for sure. We're gonna trail on Russell as far as that sort of move. Russell's gonna underperform, but we're gonna be able to, like, I trade Russell a lot, so I know how it trades. But some days I'll trade euro. Like yesterday, I traded the dollar yen. I'll trade anything really, but Russell is my main product because it's more of a tradable product versus NASDAQ, Dow, S&P. Those are going to trend a lot more. So if you are more of a trending trader, you're going to do a lot more that way. Thank you for the retweets and the likes, guys. I appreciate it. If you haven't liked the video yet, hit that little like thumb down below. That'll wake people up. That wakes up YouTube to let other people know we're trading live in here, and it's worth paying attention to. So yesterday and today were the first days of any trading I've been doing. Yesterday I took a 1 hour stop out on the dollar yen. And today we're in Russell, looking to trade that. And so far, nothing too exciting going on here. But we do have a big, big ranges in NASDAQ right now. 877 to 877, so 40-point 10-minute ranges on in the markets. Huge volatility. This is pretty impressive volatility. A lot is going on in the markets. It looks tame and normal, just like every other day, but it is definitely a lot of crazy volatility right now. So even if your position size is telling you to trade 20 contracts, I would be cutting my position sizing in half at least, or even more at this moment. If you don't have a position sizing algorithm to help you with that, and you just normally will do 5 or 10 contracts or 1 contract or whatever, you should be looking to lower your position sizing dramatically these days. Thank you for hitting the like button, guys. I appreciate that. Appreciate the retweets. I appreciate the likes on Twitter. All very helpful in getting people in here. And honestly, if today doesn't, if we don't pull anything out good today, it's no big deal. If you're sizing positions really small and you're having massive moves in the market and you're not able to get anything in your work out for you, then that's the market. The market's trading a little haphazardly for the last couple of weeks. People, longs are going to get sold because people are going to start trying to get out wherever they can. Right. So, a lot of people are a lot of people are suffering. So you notice we're kind of hanging out in this range here. This overnight low got breached, and we're starting to pull back. Overnight high hasn't been breached yet. Just kind of inside ranging. Bob, yeah, all indices, they're all they're very highly correlated for sure. Yeah, absolutely. E-mini, the S&P, it's all the same chart, really. Like I'm just sitting here now on the intraday, but on the longer term, Russell is underperforming, has underperformed all the indexes. But as far as day trading, yeah, they are absolutely correlated 1-to-1, almost identical. So when NASDAQ rallies, ES rallies, RTY rallies, all that, you'll find that on certain days when NASDAQ is rallying, Russell won't rally as much. And when Russell's rallying, you won't see NASDAQ rally as much. Those are kind of the two distinctions that you'll find with the correlation. But yeah, these are absolutely very highly correlated. So you basically just choose a contract that you want to trade. And on my swing trading right now, one thing that's really interesting is I have been attempting all week to get long the pound yen, and it just hasn't been able to get filled. There's a lot of weakness there, just hasn't been able to get filled. One thing I will note is almost every chart looks like this right now. But, you know, let's see how the euro's looking. All right, we may end up getting stopped out here. I'm gonna wait for a close. So we've got 6.5 minutes for the candle close. So just kind of sitting here watching. A lot can happen in 6.5 minutes. Is that right? Yeah, 6:34. Sure. We want to look at failed vol breakout setups. Not yet. Dollar franc. So there's no failed vol breakout setup on Aussie yet. The daily needs to close outside both Bollinger and Keltner channel, so that's not one yet. The next one was dollar franc you were asking about. I mean, that's as close to a failed vol breakout as pound yen is. It's just that the thing that keeps it from being a specific failed vol breakout is vol wasn't inside, but we definitely know it's a vol. We definitely know that there was vol breakout there. So here, yes, you could have gotten long today on that one. And you could still get, it looks like high was 95972. High, oh, so it didn't fill 95972. So it would be a buy stop above 95972, which you could put on today. If no fill, then you just adjust the entry to the same, but you're going to lower your or raise your lower range, so you increase your position sizing. For me, the trade I'm taking, because it did go inside it, is that the pound yen. All right, we got 3.5 minutes on this candle. All right, geopolitical risk on the calendar right now. So just so we're aware of geopolitical risks that might come in and affect the market. March 4th, which is today, we have the ASEAN meeting for senior officials take place in Vietnam. That's the APAC. Middle East, North Africa, Europe. Spanish Minister of Foreign Affairs to visit Algeria tomorrow. OPEC in Vienna. Eurasia, Russian President Putin to meet with Duma party leaders to discuss constitutional reforms. Middle East, North Africa, Eurasia. Turkish President Erdogan to visit Russia, meet with Russian President Putin. That's interesting because basically Turkey decided to step into Syria and start bombing a lot of targets because basically Turkish soldiers got attacked and there were Russian, it was a Russian led or a joint Russian attack. So that's interesting. March 6th, OPEC, March 10th, Brexit. I'm sorry, British finance minister to announce first UK budget since Brexit. Anyway, that's that's what we got on the agenda right now. Nothing too exciting. Geopolitically. So bottom is what we're looking at here now. What we see is that we've got this complex bottoming formation. Bottom, keeps making attempts to go lower, but keeps getting thwarted. Can't really go higher itself. Same across the board. Well, there is no setup on the Aussie Kiwi. What you're wanting to do is you're seeing that Aussie Kiwi is ready to go. Well, what time frame do you trade? That's, you know, if you want to trade lower time frames and trade lower time frames, that's fine. But be consistent, right? So ultimately speaking, if you do trade the 240, then trade the 240 and take the trade there, and it may turn out that the daily plays out and you can hand it over. Morning, Will. It may okay. So 5 minute ended, or the 10-minute candle ended. We didn't get a stop out there. We're still hanging out in the bottom range. The last 5 minutes really came in. Now, remember, in 10 minutes, when this next candle ends, that will be a 2 hour, a 1 hour, a 30, a 20, a 10, a 15, a 10, a 5, and a 1 minute candle. So you're going to have a bunch of different decisions to be made in about 10 minutes by all different time frames of traders. Okay, you're not going to look at the longer term traders; it's going to be shorter. But a 120-minute candle, 2 hour candle is what a lot of people who are looking for a couple of days or uh, half day sort of moves. They're going to be trading off the hourlies, the 2 hours, and down to the 30s. So VB, if you do trade, like, you don't have to trade. You don't have to take this trade, the Aussie Kiwi. But if you have a 4 hour candle that says it's a trade and you are able to stay awake for the next 16 to whatever hours that it's going to take for a 4 hour to play out, then take it. But the problem that I have with 4 hour candles oftentimes is if I don't have if it's 4 p.m. or 8 p.m. and I have a 4 hour candle fire for me, now I basically have to stay awake the entire night to trade that thing, or I have to wake up at every 4 hours to see where that trade is going. So that's kind of the downside of trading a 4 hour candle. And if it's earlier in the morning, you can do it. Or if you're comfortable with the risk because you're just going to set it and forget it, that's also fine. All right, let's hear them, Will. Hopefully I'm able to answer your questions. Too much good sleep the last couple of days, and I'm just a little extra groggy. Okay, Euro pound. Let's have a look. Okay, that is a failed breakout. Yep, you would be short. And then pound franc. Failed breakout, and you would be looking to put a buy stop above here today to get long. Yep. So basically well, okay, it wouldn't cancel it out. So if you're shorting euro pound, you're shorting euro, you're buying pound. If you're buying pound franc, you're buying pound. So now instead of having your instead of being canceling out the trade, you would be doubling up a long pound trade. Okay, so you'd be shorting the euro and shorting the franc, while you would be going twice as long the pound. So if you're thinking of doing this trade, what you end up doing is, let's say you're going to risk $100,000 on both trades. So instead of risking 100,000 or 1%, let's say, instead of risking 1%, you're actually risking 2%. Right. So you're actually risking 2%. No. It is essentially, but you're going long twice the pound. You're not going long and short the pound. That's how you would do it. You'd size it at 0.5%, because you're not going, it's not a euro franc position that you're in. You're in a euro franc position, but you're also in 2x the pound. Okay. So you're short euro, short franc. So let me just kind of draw this one out. So you would be GBP So that's what your actual position would look like. You would have twice the long pound position. Okay, so the position, so if pound's here in the front of it, that's your main direction. So if you're shorting or if you're going long pound franc, you're buying pound and shorting franc. Okay. And if you're shorting euro pound, you're shorting the euro and buying the pound. So in essence, what happens is the first pair is the one that you're going directional on, and you're using the other pair as the other side of it. I wouldn't choose one or the other. Basically I'm doing pound yen. Actually, that's how I'm doing that trade. Um, so I'm doing the pound yen here trade versus the other two because it's a failed vol breakout. We had compressed vol and then we expanded where the other twos didn't. So I like those better. All right, another attempt at the bottom, didn't hold. This is could be a three dive pattern, which is actually bearish. So it's just taken 1, 2, 3, multiple runs at lows, and it keeps thwarting it off. So what's that telling us? One, either it keeps making those attempts, and it's just bears are stronger than bulls. That's one thing that we could be learning from this one right now. Or bears are going to get exhausted because every time they come down and make an attempt, they get thwarted and they just keep getting thwarted. So if bulls can take control here and start running this thing higher, we could have a nice strong up move. But if they can't, bears are really showing their hand saying, hey, yeah, we're really going to make an effort to get this thing down there. So we'll just see what's going on. A lot of indecision. Again, this is why I'm saying we want to be in a small position size, small positions here, because you know what the potential is here. If this thing cracks, this could be, we're up 1% right now, almost, 2% on the main indexes. That could be down another 2% rather quickly. We know we're in that environment. We're in that volatile environment, whether it's bullish or bearish, it's a volatile regime right now. To answer your question, sorry, Will, I would do, if it tells you to trade, if normally you'd be risking 1%, you could take both those trades and just risk 0.5%. This is what happens is you're going to find the best pair. You're going to find the best pair. You can go through and go through all of them, the way we have all the different pairs, and find which one's the strongest, which one's the weakest, and match those together. Or you can take, because if you're going to have one pound setup, you're going to have probably 5 or 6 different setups on the pound, right? So you're going to have like a bunch of different pound trades set up. And so you could do like 1/4 risk, 0.25 risk on all 4 pairs, or you can just find one that you like and take that one. Okay, 97.5, 1497.5, 1497.5 would be the next attempt. This is a, let's see what the 20 looks like here. 30. So we take out down, up, inside. So, wow. Yeah, yen is definitely a trade that is correlated with the equities. So on my swings, I wouldn't be buying equity indexes while I'm doing a yen trade, because that's basically it's correlated, highly correlated to the equity indexes. So if I'm day trading Russell, swing trading the yen, it's kind of the one or the, it's kind of the same. Oh, wife's got to go to a doctor appointment. I'll be right back. Joseph, I wait till bar close. Feel free to close intra bar. I'm just very comfortable with waiting for the bar close. Uh, and I know that, yeah, I can have catastrophic losses, like 2 or 3 R, 4R losses sometimes. But I consistently pull in, 1 to 2R uh, over the course of the year. So I'm not too worried about those. That's my trading style. I've been trading this way for years, and so I'm very comfortable with it. But I've done, thousands and thousands of back tests on that. And for me, I found that, yeah, I'm going to take a hit, but the days that I take a hit are rare. And over the course of a year, I'm going to walk away with 2 or 300 R on the year. Well, from 50 to a couple hundred R on the year. And the days, I may take that's including the 4R big, ugly losses. But personally, I am very comfortable with waiting for a bar close to exit my trades. I also I use stops to enter, so buy stops or to get long, sell stops to get short, versus just going where I see a pattern saying, oh, that's a double bottom pattern, I'm going to get in here. Next thing we're seeing here, we got a head and shoulders, which some people think is the reason I'm going to bring this up is the reason I point these out, whether they're tradable or not, is that other traders are going to see this. Bulls are going to be seeing a head and shoulders. Bears are going to be seeing possibly a head and shoulders here. So you have just a lot of confusion and a lot of drama there. Ever thought about a 2R stop loss at times when so what you're saying is intra bar 1R, my main stop, and then if it hits 2R, just exit? Yeah, I've looked at that. Oftentimes I will when I'm like it is obvious that I am in a trade that is taking me out, and if I can't handle it, I'll go ahead and exit. That's a sign that I did, something's wrong. If I can't handle it, I've sized it too big, or there's some reason to do it. Actually, you know what? I need to go tell my wife to get some light bulbs. BRB again. She's gonna run some errands. Thanks. I'm on mute. Okay. Will says, currently I can't handle it. Okay, so one thing I want to point out, Will, is that I've been doing this for over 20 years. So 21 years now, probably. So what is, what I'm able to do means I've got tens to hundreds of thousands of trades under my belt. In addition to that, I have manually back tested hundreds of thousands of trades, manually back tested, not wrote up some code, a strategy, and then and then hit compile and just see a beautiful result on a strategy. That's not what a back test is all about. Bye, baby. And so what that does is that gives me thousands and hundreds and tens and thousands of reps in my mind. So trading it now, it's not the same as real trading because you're not able to separate the money loss from the actual the business of it. But after a while, you start to learn and you can do these manual back tests. And when I say manual back test, I'm talking manual. Like I go back in time here and I'll just type in, let's do 2002. How about that? Let's see if that works. Okay, 2002-04. This is my first bar. And let's see, I'm going to put a horizontal line here. So I'm sorry, a vertical line. Where is it? Oh, there we go. I'll put a vertical line here. Nope, I'm going to have to do it this way because it's not listening to me. Okay, so yeah, it's pretty goofy that you don't suddenly you realize, oh wow, I'm actually one thing that really, as Peter would say, grinds my gears is people sit here and talk about paper trading is not real, it's fake, it's not useful, it doesn't work, all that crap. And I'm here to say, cool, I'll take your money because you're not willing to put in the practice. Just like you can't sit here and tell Kobe, I'm not comparing myself to Kobe, but you can't sit here and tell Kobe, who wakes up at 3 a.m. and can train, he can do 3 workouts or 4 workouts a day where other professional players are only doing 1. What is he doing? He's practicing dribbling. He's practicing free throws. He was, he was running the drills. He was practicing certain shots because he knew he had somebody that just wouldn't be able to defend this one shot in this one location based on that, that team's offense. It's the same sort of thing as practice. If I'm doing 4 back tests per day, that's 4 hours of back testing per day. And somebody is not doing a single back test, what's going to happen is I'm going to run circles around them. Okay, so here's how I do a back test. I want to be clear, everybody, so everybody understands what a back test looks like. Of course. All that work. Okay. Let's just go back in time again. All right, let's find our horizontal. Okay, we got our horizontal line. Okay, looks like we got 2 horizontal lines since this one. Okay, so here's what a manual back test looks like. Is May 2nd, 2002. And now I am just going to scroll through a chart looking for a setup. We got a vol breakout. We had compressed volatility here. So the Bollinger Bands were inside the Keltners. Good compressed volatility. Boom, vol breakout, close outside. So now I'm looking for I cannot seem to, I can't size this one because I'm going to need it there. So what's going to happen is I'm going to look for an inside bar. Okay, or a smaller bar. So now a buy stop above here, the move to the midline is capable. So I'm going to go ahead and enter that trade setup into my spreadsheet. So high 184.125 with a low of 184 or 182.415. So 184.126 would be my entry and 416 would be my stop, or 4 would be my stop. no fill. And now the risk parameter is too large again. So the move from the top of here, bottom here, the risk range to the midline is too high. So we're going to wait for a consolidation bar. That is a potential. I'll go ahead and enter that one in. There was no fill on this one. So what's important about that is if you don't trade above it using your buy stop, you don't get filled and you're not in a stupid trade that you shouldn't have been in because it's not done. Okay, now we have a nice inside bar. This pattern actually looks almost identical to the one we have right now, right? So buy stop 182.385 with a low 180.675. It's a big range, geez. So it's got to go above one tick above 182.386. So enter that in my spreadsheet. No fill. Now we have a nice tight range. Now I can really size it. So whereas I would have had like $100,000 position, now I can probably have like a 500 or at least a $200,000 to $300,000 position on this one. And it filled. And we got stopped out. And there you go. So that's a 1 hour losing trade. That was actually closed. That was a 2 hour losing trade. That's what a 2 hour loser looks like. But that's how I actually manually backtest. All right, so let's see what everybody's saying. Yeah, too many people sit there and tell you that it's not useful to paper trade because it's not real. It's not the same as what it's like in real time. You're not going to feel those emotions. And true, that's totally true. But guess what? No, Will, I don't enter my no fills in there. I enter them in my spreadsheet because my spreadsheet gives me the parameters. And if it ends up not being a trade, I'll just remove it from my thing. So what is, let me bring this to life. I was in the Marine Corps and I was also a contractor for the Department of State, and I worked in Iraq for about 7 years. And the idea that it's not the getting shot at or going to the shooting range are not the same feelings. You have a paper target and you're moving around and shooting that paper target, right? That's not the same as somebody at the other end of that with the machine gun and RPG and, grenades and, 100 people screaming and yelling. That's not the same. But would you go to a place like that? Would you go to war without practicing shooting your rifle and your pistol every day? Probably a bad idea if you want to stay alive. It's the exact same thing. Football players, before you go play ball, you don't just like, well, it's not the same of getting hit. So I'm not going to, I don't need to practice. I just need to go out and play the game. Basketball players, it's not the same as going out and playing against LeBron James as it would be to just sit and practice dribbling in a gym that when I'm all by myself. True, it's not, but how are you going to get better at it? You have to practice to get better. Backtesting manually, not only do you train your mind to get better at trading, but you also and that's the best thing, but that's where you start to get these new ideas, new ways to see things, new, like, oh, I can do this, I can do that, I could do it this way, I could do it that way. And you start finding ways to kind of make changes in there, right? Like, oh, I never really thought about, having a down up that failed. I never this sort of candle, if I see this candle and it never fails below it, I wonder what that does. So go back and you get so many ideas from it. Watching your full look back on Bitcoin a couple weeks ago was very eye-opening. Made me realize that backtesting isn't difficult, just time consuming. And it's such good consumption of time. It's such a It's such an amazing use of your time, AT. I can't stress enough how important back testing is to my business. Like I could sit here and be Mr. Grumpy Pants sitting there talking about oh, here we go. All right. Get some LED lighting for the house. I could be, Mr. Grumpy Pants and sit here and say, yeah, back testing isn't the same. You have to do it for real. But why risk $1 trading uncertainty when you can risk $1 trading with a higher level of certainty? You may not even know what your level of uncertainty or certain is. You can keep track of your trading. That's fine. And that's what everybody's really, oh, you have to have a journal and, Trader View or Edgewonk or whatever, daily journals. Oh, they're super important. You got to do it. I guarantee most people aren't doing that. That's fine. That's walk forward testing. That's cool. You're keeping track of your stuff real time. But if you can't compare it to what you are or what what your stats really are, like if you have a 73% win rate with an average win of 1.3 and an average loss of like 0.92, and then now you're out trading and you're getting like 0.7 wins and your win rate is 63, something's off, right? If you got thousands of trades and you're not there, what's wrong? What's going on? Are you not executing? Are you not performing correctly? Who's the problem? Yeah, there you go. You can do, I can knock out 20, 30, 40, 50 manual back tests per hour. I'm up to about 50 now per hour. Okay. That doesn't seem like a lot, but it's like, that's doing 50 trades. And I've been in this trade today since 10 a.m. That's 2 hours and 10 minutes. I've been in this trade for one trade. I can do 100 manual back tests in that time, whereas I'm only getting the experience of one trade right now. So I have all those calluses and all that stuff I've learned over the years right now. Cool. But I don't have, this is one trade where a better use of my time, I can get 1,000 trades in a day if I just lower my head and go to work. I can do 1,000 manually back tested trades. And you know what? It takes about 15. I need to have 1,500 manually back tested trades before I'm willing to take something into a beta test. Okay. So yeah, okay, VB, yeah, you have topping pattern here. One thing we want to look at is where did we double bottom yesterday? We double bottomed here. We moved up 50% of the move here and reversed. And now we moved down 50% and we reversed. And we started to put in this reversal candle and now this one. So if we get a move above 99.7, so 1,500 on Russell, we could be off and running. Control here for sure. And now they're weakening. So now we're going to look for a 50% move up here. So right in the 1502 area, which is my price target anyway. So I'm looking for a counter trend move. And so far, so good. One of the other things you got to pay attention to, how many people are going to listen to me right now, hear me talking about the benefits of manually backtesting a system and are actually going to manually backtest a system. If there's 20 people that are watching this video, 50, 100 people, 2 people watching this video, let's say 100 because that makes math easy for everybody. I'm going to say probably 5%. So 5 out of 100 people are actually going to do it. And then of that, I would say maybe one, if that, of them are going to continue to do it. And I would say one out of 1,000 who ever watch any of these videos are going to do it consistently. They're going to stick with it, and they're going to actually implement that into their trading business. So what does that mean? I have such a huge advantage over them because they're not willing to do that hard work, and I am. And so I know that they're just going to wake up and they're going to look at the market and they're going to fire up Twitter or YouTube or whatever. And they're going to, come in and they're just going to do what they want to do because they feel that they've got they got the feeling for the market, or they're going to do it. And they're going to be the people who are going to give me their money day after day in the market. They're going to be the ones who are shorting my longs. They're going to be selling to me when I'm buying. I'm going to be selling to them when they're buying, and I'm going to make money off of them. That's just going to happen. That's just how it works. And it's kind of cool, I got to say, because I know that the only thing between being successful at trading and not is doing that hard work. I've found that's like I've unlocked that secret. So I don't need to, I don't need to constantly be searching for anything. I've already figured that out. And I'm telling you, that's the secret to trading. Just like the secret to, secret to life, right? Just hard work. Like everybody knows it. Took a while to bottom out today, didn't it? All right, I'm gonna make me another cup of coffee. I am groggy. BRB. All right, VB. Have a good day. All right, so we're going to get a little bit of a move back, mean reversion. Yeah, we're kind of there. This might continue to be a little bit bigger of a trade. Let's have a look at what our different time frames are telling us. Major indecision on the daily. Daily is looking like we're getting a bit of a bottom. Indecision on the 4 hour, 60s holding the midline, it looks like, and the 10 we're doing all right. I'm not hating this position at the moment. Excuse me. I forgot. I actually have a chair at this desk. I'll have a sit for a moment or two. Pretty boring, huh? A little bit drama all morning long there. So one thing we could also say is that bears saw this. If we saw a head and shoulders ourselves for the longs, bears saw this head and shoulders, right? So they're going to have stops right here. The next level for stops is going to be all the way up here, 15, 13 area, or maybe here. Let's have a look at that. 1509 on the 30, 60-minute traders have gotten stopped out there. So the next one would be 1513 area. Yep. So there's a lot of room for bears to sit comfortably short still. NASDAQ back up over 2, Dow 2.25. See how big of a gap we got today. That was a pretty good sized gap, huh? Holding it so far. Almost a gap fill on IWM today. No gap fill, almost a gap fill, but oh, gap was down to here. All right, I am not much going on here. I'm just going to sit in my position here. So far, this is looking like our first look back. So we'd be looking for a bit of a bull flag to happen. Sorry, Bob. Well, yesterday was a tough one anyway. Had a loss. All right, let's have a look at this before making any decisions. So looks like we potentially have bears are seeing this. Bears are seeing this as a bear flag. So little pullback. A lot of people are probably expecting a move back up into here, and that would still be where bears are going to get a lot more action, a lot more desire to step in here. So I'm keeping I'm going to keep my position on, and I got some work I got to do. So if you haven't done your hour of back testing yet today, now is a fantastic time to take control of your life and make yourself a better trader. Get out, get an hour of back testing, 20 to 30 manual back tested trades, get it into your system, make your life much better, create that future you want for yourself. I cannot stress enough how important it is to get your practice in. That's where the big money comes. That's how you stay in this game a lot longer. I'm going to wrap it up. If you have any questions, drop them in the chat right now. Ping me on Twitter. Otherwise, I'm going to get to work on other stuff today. Bob, good to hear. QE earnings system. Love it. That is a beast of a system to make money. Yeah. There's actually a lot you can do with that QE system that hasn't been done. So once you start getting all those different back tests in there, you'll start seeing things you're like, oh, I could do this, I could do that. The QE system is definitely there for you. But you can make it your own. So I'm loving hearing that you're going to be doing that. Let me know how it goes. Hit me up on Twitter. Everything else. All right, guys, have a fantastic day. I'm going to do a good sign off here.